Alrighty, welcome everybody. So it is Tuesday, July 8th, 2025. More than halfway through the year already. Things are flying. Lots going on out there in the markets right now. You got tariffs back on, the docket for now August 1st. They're delayed again, but who knows what's going to happen. I think the market's starting to get uh, a little steeled against moving up and down on the tariff news. I think they'll believe it when they see it. So I don't know that that's going to make a whole lot of impact. We already saw the impact once. Things have been pushed around and pushed off and such. I'm not that worried about it. Seeing a big market move right now. So markets are you know, at near all-time highs. We'll share some screens in a second here. But we're just off the all-time highs set 2 days ago, so markets are in really, really good shape. Here we are a bit overbought and maybe curving down, so it wouldn't be a surprise to see a little bit more selling, but every dip seems to be bought in this market. So I think if you're looking at opportunities, it's buy the dip, and until something changes out there, this is an absolute buy the dip market. If something dips and it's something you like, you don't get a lot of pullback. Pullbacks are pretty shallow, and dips get bought. All right, so let's rock and roll. Let's jump into charts. If you guys have questions, as always, you can put them in the chat. New members, welcome. Old members, welcome to everybody who's here. But if you got questions, pop them in the chat. I'll try to address them as we go. We'll keep it to an hour. We'll be done by 1. And as always, we'll take a look at charts first, see if we can pick out some trade ideas. Then we'll go into the account, review some of the positions, and then we'll model out some trade ideas as we go. Markets are pretty much just flat today. I think it just needs a little bit of a break. And I think, again, you're getting opportunities every time that there's any dips. There are opportunities for you. All right, let's get in. That's enough talking for me. I'll get off the screen. You don't need to see me. And let's rock and roll on what we're looking at. All right, ES E-mini futures, just 2 days off of all-time highs that we just set back in here, where we topped the 3 ATR, the Bollinger Band. You had RSI in the overbought territory above 70. You got stochastic momentum at one of the highest levels that it's been, starting to roll over, including MACD here as well. And see if we can move this down. But so including MACD, all have been rolling over since we hit those highs the other day. And again, it's an opportunity, in my opinion, to potentially just buy the dips. I'd love to see us come back down to this previous level here, right around the 65 or 6150 level. That's a great level, in my opinion. That's the 21-day moving average. Oops, hang on. That's the 21-day moving average. It's also this previous resistance, which can be flipped to support. I love this area. If we get any pullback down to here, I think it's a great opportunity on ES. So what would we do today as we're looking at this? How does ES set up? It's overbought, starting to roll over. I don't think that means get long here. I think, and any pullback, though, I think it's an opportunity. I really wouldn't do anything on ES. It's not a strangle setup at all. We're nowhere near like the 50 or the 21. RSI is nowhere near the 50s, either on the weekly or the daily. So there's just no real setup there, in my opinion, for strangles. 112s or naked puts, which is basically the same type of thing. Or ratio spreads. Man, I just don't think that is a high probability play up at these levels. I think you want a pullback. I think any pullback, though, would be a reason to get long, whether you want to do credit spreads, naked puts, 112s, J lizards, you name it. I think you want to keep the risk to the upside minimal. And I'm seeing predictions of 6,600 to 6,900 out there for the year. So I think, and again, any pullback is an opportunity. I just don't see any trades in ES here. We'll stick to anything mechanical that we have working on, like the 120-day naked put trade or the 112s, but we're not on schedule to put either one of those on for this week. Let's keep moving quickly. All right, oil. Oil's been on this nice uptrend, and again, I know there's a lot of lines on this screen for you, so a lot of stuff happening in here. The whites are typically anchored VWAPs from both the lows and the high points. In fact, I can probably move this anchored VWAP over to here now, um, and we'll let that thing work. But what's interesting is that we did break through the anchored VWAPs yesterday, both the ones from the highs and the ones and so the ones from I'm sorry, either both highs, the recent high and the previous high back here in January. Broke through that yesterday. Things look pretty good overall on oil. I really don't see the rationale for a lot of heavy upside. But look, you got stochastic momentum way down here in overbought territory starting to cook up. You got RSI starting to climb. You got the move in MACD turning and moving higher. You're bouncing off the trend line. You bounced off support and the anchored VWAP and the 50 EMA, breaking back through the 21. I mean, things look really nice on oil. I think oil is a good play right now. It still is, in my opinion, a good 112 trade and a good strangle trade. 112 is synonymous, again, with anything else that's bullish that you want to do. So I'm just bullish but cautious on oil. I don't want to cap my upside on it just in case something else flares up. But I think the 112 is still a great trade because if we do pull back, and I don't think we crater on oil, if we pull back landing in the trap, uh, then I think that's a great opportunity. Remember that the 112, the trap is not a hedge. It is really just a bonus that if we happen to pull back a bit, kind of like a strangle or a ratio spread or a jade lizard or an inverse jade lizard, any of those where you can pop yourself into the trap or the bigger tent, I think is a good opportunity trade. And I just don't want to have any risk to the upside. All right, so there's oil. I like it. 112 strangle possibilities exist there. All right, gold. Gold's been just consolidating. If we look at the weekly, it's a lot more clear on gold what on this consolidation. But you can see here on the daily, we've just been in this range now, dating all the way back to about April 11th. So we just continue to be in this range. Okay, we're right at this uptrend line. Oops, dang it. So right at the uptrend line for the most part, trying to break down below it. I still think it's a good setup uh, for gold. If we're looking at the weekly, momentum is down, so we could be seeing a little bit more pullback on this. I just don't see a reason for gold to just totally crater here. The U.S. dollar stinks right now. I think Bitcoin and gold are still strong plays for this year. I think the market being strong and doing what it's doing, uh, keeps the dollar or keeps gold at bay. But it's just only a couple of weeks from its all-time high, so not a bad opportunity here. I think gold's setting up even better for like a strangle opportunity or 112 strangle, potentially a jade lizard. I just don't want to give myself any risk to the upside in gold. We are one U.S. default on debt or some other crazy thing, credit issue away from gold just rocketing higher. So I would want to have my risk very carefully placed on the upside there. I really don't want to lock myself into anything here. So while we are falling and we're below the 21, we're right at the 50 here. It's a good play. I think strangle-wise, it's not bad. Jade Lizard, 112 again. So those are all good. Bonds continue to pull back. Bonds just cannot get going. You got the bond vigilantes out. They're going to push this thing lower again. The uptrend line that bonds were in is now gone. Could probably just take this off the table as well, and we're going to start watching this previous support level that we have held a couple times this year, and then we've got a little bit more support just below that. So the support is to the downside, okay? And I think those set up pretty decently in here as support levels. So anything between this 110, 111 and change level on bonds is good. I think the pullback is giving you more and more and more opportunities, but I think you just let it play out right now. Momentum is down. It's strongly moving down. RSI, stochastic momentum, MACD, they're all moving down towards the bottom of the Bollinger Band. I just see no reason to jump in now. So I would just personally, I'm going to put an NA here or not, no trade, NT, whatever you want. I just don't like the setup in bonds. I think a strangle is a possibility. I just wouldn't rush into it. Let's just see what happens when we hit the Bollinger Band, or if we come down and slap into here. I just don't see any reason to rush this. If you had to do something and you were going to force me at gunpoint to make a decision, I'd probably say that this is a strangle only opportunity right now. 21 breaking below the 50, heading lower. So there's bonds, copper futures. Okay. Coming nice breakout, coming back to previous resistance, which could now be potentially support on this. I think copper sets up well for a strangle. If we get a bounce, and I love the doji here, if we get a bounce off of this 21 and this support level here, then maybe I just don't see any big catalysts for copper right now. And it was overdone, coming back, entering a decent area here for strangle trades. Silver, pretty much the same thing. It's really struggled with this resistance level that we've been at, and we can actually change it, move it up to here more. Okay. Now, it is a bit of an ascending triangle. Don't know what the catalyst would be to get the break of it. We didn't get a break, so there's no reason to go long. Only when this resistance breaks, then I would potentially jump in long with something. Other than that, right now, it's probably also a strangle opportunity on silver. So commodities, strangle opportunities everywhere. Gold, copper, silver. I think commodities are decent. NASDAQ looks exactly the same as the S&P. Previous pivot point here. Maybe an area to watch. If we can get that pullback, I think that's what we target is a pullback to here to get long. Otherwise, I see no real reason to be piling into the NASDAQ or tech stocks right here. They've had a pretty good run. RTY, you've had that break coming back here. You've got Golden Cross potentially setting up here. I think this looks pretty good. Any pullback here, I think, is an opportunity off of this trend line, off the 200, off the 21, potentially even off the 50 that's coming up. I think there's opportunities coming up to get long, but not yet. So I would be on a holding pattern again for all of the indexes. All right, now that's pretty much it. The Aussie dollar, strangle opportunity, most likely in here, just hanging around these levels on the weekly and the daily between the 50 and 21. RSI pretty much dead middle on both of these. If you want to strangle that, you probably could. All right, quickly, let's rock and roll through some stocks and take a look. So these are my top stocks. These are really the only things I like to trade. Right now, I did move AMD up into this level after the pullback that it's had. It was no touch for me. Now it's something to potentially look at from a trade standpoint. But if you're asking me, are these other stocks good for poor man covered calls? Well, they're not for me, but maybe for you, it is. And I really want to emphasize, and as much as this may be confusing, especially for probably current new members, what have you, There are three portfolios that I'm running here. There's a small account, okay, which is basically running the income poor man covered call strategy on just a few stocks, mainly ETFs, uh, and plus Hood. But then there's the lazy trader account. If you're in the lazy trader account, that is an investing account. That is long-term capital appreciation investing. And if I do anything in there, it's long-term focused, not really a big cash flow generating tool. And if I'm going to do a poor man's covered call or buy a leap and write some calls against it, then I am going to be out of the money. I will not be doing, at the money strikes because again, I want the capital appreciation in that account. It's a long-term hold account. Don't want my shares taken away. I don't buy shares of stock typically. I only trade options, leaps. I get the leverage. I get a better return on my money. I can still go out a year or two on those, but you won't see me doing stocks. But if I do sell calls against it, like we have, and I have Boeing and Amazon and some others, I'm selling out of the money. But if I'm in the trading account, I want the cash flow. I want shorter term trades. I want anything, that's a week to, maybe 90 days out there. But I usually like to be out of most trades within 45 days on average. So that's kind of the longest that I'm usually in a trade is 45 days at most, and those are typically strangles, maybe a 112 naked put. That's pretty much it. Most everything else is going to come off a lot quicker than that. Anyway, uh, let's go through some stocks, which I don't love stocks that much. I'll do some in the investing account. I really don't like to trade them. The whipsaws can, over time, some of these can be great stocks over time, which for the investing account might be okay to own that company. I use Leaps to do that. In the trading account, I don't like it because news can just kill you in a trading account when it comes to these. All right, let's go. So Amazon, nice breakout of this ascending triangle, came back down, retested it, started to move up, came back down and retested it again today. So this has been a pretty good support level. So I think Amazon is still not a bad play in here. If I was doing something from a trade standpoint, you can potentially swing trade it, maybe sell naked puts, something like that. If you wanted to wheel it, I'd love a little bit more of a pullback to this uptrend line uh, here or the 21. But I think you could do anything under this level as potentially like a put credit spread or some support or naked puts um, on Amazon here. It is coming down from being overbought on RSI, so you are losing a little momentum. I just don't see a need to jump in on Amazon here. There would not be really a trade for me at this point in time. I just let this thing settle down. Okay. Nvidia, earnings are quite a ways away. Okay? So really no hurry on Nvidia either to do anything. And you've got gaps to fill down in here. I really wouldn't be in any hurry to be trading Nvidia. I don't even think that's a great support area. Maybe it's closer to here or something like that. Um, but until we come down on Nvidia, to me, I just don't see a trade. You're overbought RSI, stochastic momentum's overbought. It's super strong. If you're in it, great, congratulations. You had the golden cross back here. That was the signal to get in. This break of this level was your opportunity. If you got in, you're great. If you didn't get in, to me, it's no touch. Hood, kind of the same thing, but I'm excited to maybe get a little bit of a pullback going in Hood. It's overbought. RSI is rolling over from overbought. Stochastic momentum coming down. MACD coming down. You flipped to a bearish PSAR signal today coming down. I think that's all good. I wouldn't trade it, but I think this is a great opportunity. If you're in it, obviously selling covered calls at that level would be great. But if I'm not in it, let's give it some time. See if it pulls back. Okay. Dips get bought, and this might just get bought, and you might be off to the races again. I just don't know that you really want to be chasing Hood here, but I think it is a fantastic company. Would I sell a poor man's covered call on it in the investing account? Maybe. I don't know. I think it's just a strong stock. Uh, so I like it. I think the pullback is healthy. It's good for it. Why not let this thing just consolidate a bit more and give yourself some opportunity? Palantir is really interesting, really consolidating here. Let's get this uptrend off of here a bit. Let's just see what happens with this thing. Just right now, it's kind of just trending sideways. But when it seems to do that in these types of areas, it just is gearing up for yet another run. So here, we hit it, consolidated, hit it, failed at it, 21 EMA, finally broke it, and then uh, it, made a nice run, hit the top of the Bollinger Band. Big down day. I think this was an opportunity. We did get into it back in here. I sold a naked put in the uh, lazy trader account. So I'm actually what I yeah, sold a 7 days ago, about a week ago. So on that big move, okay, I sold a naked put. That thing's up 60% now in 7 days. Uh, would you touch it here? Maybe. It's so overbought. It's ridiculously overbought. But you know what? I think if you wait for it to come down to its valuation of like 40, you're going to be waiting until you're dead. So at some point you may decide, yeah, it's my opportunity to get in off of this 21 EMA. This is not the worst spot to maybe play something in here either. So consider it. You can look at it and see how it goes. All right, Tesla again. Every time, it's all Elon and Trump. So either Trump knocks it down with things he says, okay, or Elon knocks it down with things he says or does. Almost none of this has anything to do with fundamentals or any products of the company, which is why I think when you get these things that get knocked down and knocked down, I think these are gifts in large part. The weekly looks a bit suspicious. I'd be a little bit cautious on this thing here. I don't know that I would jump into Tesla here. We're in it with a couple different trades. I think we'll just stick with the naked puts that we have down at 275 in here that we sold. We'll see what happens if this thing can just maintain, hold on in here. Uh, I don't like it. So we're not finding a whole lot of tradable items. Meta, though, I love the fact that it, broke out, came back down, pretty much came down pretty close to this support level and this uptrend line. Uh, Oops, take this a little further is what I was trying to do. Okay. Not a bad spot. Good momentum. I think Meta is not a bad play. If you're, again, looking at something from stock standpoint, I'd consider potentially like a naked put or something on Meta here. Some pretty interesting news too. I don't know if this will show up on the AI um, pieces. So it's hired 9 researchers from OpenAI. Okay, it took the head of Apple AI here. So they're building a super AI team here that may really propel this thing. I think they're well positioned. I think it's a buy the dip opportunity. This might be the dip to potentially buy on that. All right, Apple been a good trade for us sideways. Uh, we're up on this trade. I didn't want the trade that I have in the Income Navigator account. I think it was better for the Lazy Trader account. I think this is still an opportunity, especially if you get any weakness. So stochastic momentum is getting a little bit overdone. MACD is starting to roll over. I think if you get a break or any more weakness here, I think Apple is uh, a good trade for like a poor man's covered call. It's pretty steady, good company. I don't think The IV's okay, so you could maybe even do an income poor man's covered call. Just a quality company, nothing great, not innovating great, but they're just a good product company. Uh, Google remains in this um, trend. It just keeps trending uh, up and down, up and down. This pullback, it's given you another opportunity. Overdone. Let it chill out. I would not be in any hurry on Microsoft either. I am and Costco. We got into this yesterday, so I did Costco as a lazy trader trade. We got in yesterday on this decent volume move day. It's just sideways consolidating. I think it's fine in here. I think it's a perfect poor man's covered call setup for now. Uh, Nothing to do. It's fine. So I like Costco here. Hims has a big gap to fill. I think the jury's a little bit out, but I would not be opposed to some sort of a swing type trade here of either a put credit spread or naked puts on Hims. Don't know if I want to own the long term. It had the cup and handle formation and it got nailed, dropped down when Novo Nordisk pulled out, bounced off the Bollinger Band, consolidating sideways. This is not bad. So I like the sideways consolidation on Hims, not too bad. JP Morgan, you're getting a gift today. Uh, HSBC downgraded JP Morgan from hold to reduce, revamped its division. I don't know what's the what that if that's just the main reason for this thing, but JP Morgan right now is giving you, in my opinion, a slightly decent gift here uh, on it. If you're not in it and you're looking for a poor man's covered call opportunity, this might be it. If you get any more weakness on this thing, we can let it go. We don't have to be in a hurry. Any more weakness, I think JP Morgan is a buy. I like financials here. AMD, you're getting good consolidation on this thing sideways. I think it's okay for a trade here. It's had a huge V-shaped recovery. If you're looking at the weekly in here, any pullbacks I think are an opportunity now that it seems to have its act together a bit. I think AMD would be okay if you're poking around for some trades. SoFi has just been on an absolute tear. We got in on this thing uh, quite a while ago. In fact, we got in on this thing when SoFi. We've been in it for about 50 days now. So we got in right at the right time on this. It has rocketed up. We own the 10 leaps. So this thing is doubled. We have 110% return on our SoFi leaps, which are fantastic. Okay, and then mags, I think we just let things play out in here. This has been a good poor man's covered call trade for us. Income poor man covered call trade for small account. I love Uber. It's taken off. It's making the break again. I think Uber just continues to be strong. When you get opportunities on Uber, I think you got to take them. I think the company is a really solid, good company. Netflix, good pullback. I'd like more. I'm not touching it. Walmart, it's kind of just hanging around. I don't know if there's a really great way to draw this exactly, but let's see what happens with Walmart. If you want something that's a stable poor man's covered call in your investing account, I think Walmart is the way to go. Somebody asked me about AVGO on a poor man's covered call. I don't love it. It's too volatile, I think, for me to do. So it just doesn't fit my style. Plus, the RSIs are overbought on the daily and the weekly. I just don't think this is a good time to get in on AVGO as well. Salesforce, this might be a good time to get in if that's something that you like. Berkshire Hathaway has been really weak. I think it's a great opportunity here to get in at the 200-day moving average. We're already in this trade. Our Boeing trade has been in great shape, back to highs. in here, nothing to do with that. And then Chipotle is another opportunity trade here that on this pullback, we might have a little bit more to go, but at the 21 EMA, I think these are opportunity trades. At the 21, I think ARM is another one of those opportunity trades here. If you want to trade, sell naked puts on this bounce or holding here, I think that's not the worst idea uh, in the world. So I think ARM, not a bad idea. All right, I think that's enough. We've covered a lot. Let's hit just a few quick little things here. Number one is United Health. Okay. Oh, this is a funky looking chart, but this thing has just been sideways trending on it, really bouncing along this trend line. It's really, as much as anything, it's a bear flag. If we do break below 300, then there could be some issues with this thing. I just don't know that it's going to do that. I love the entry on the week here, so we're long on this thing, and this has just been the gift that keeps on giving for us. I just keep selling put credit spreads and naked puts on this thing and just generating cash flow. It's had a pretty good drop for the last 3 days. Now, from the top of the channel back to the bottom of the channel, I think another good opportunity here to again potentially sell some put credit spreads down in here. Okay, define your risk and make them look good. All right. Lastly, Bitcoin doing well, consolidating, but that's what happens with Bitcoin. It consolidates, breaks higher, consolidates, okay, and then moves higher typically on that. So it's just in a long kind of consolidation period, but it's just off of all-time highs uh, from several weeks ago. It's sitting very close to highs. I'm very bullish on Bitcoin, which would mean IBIT. I'm also very bullish on IBIT. I think this is a great poor man covered call, or just just own it. And then MicroStrategy, kind of the same thing, just been in this range. Let's take this off here, and we can put a little support level down here. Okay, that's been a great support around 358. We're trading in this range. You made the break of the range, came down, tested the range. I think this is not a bad uh, spot. It's a little bit overdone, but I think any weakness in strategy gives you an opportunity to get in. And Ethereum, good consolidation here, wouldn't do anything with that. All right, there's enough trade opportunities and ideas. If you guys don't have any, let's just jump in and look at the accounts. And oh, man, markets are up, they're down, they're up, they're down, they're everywhere. All right, let's get into the account and let's put some trade opportunities on. If you guys have something specific you want to cover, let me know. If not, I'm just going to keep doing my thing. Here's the Income Navigator account. We are in this 112 on oil. It's at 52% in just 11 days. I mean, it's been a great trade for us. I still think a 112 or a strangle is a good opportunity here. I don't really have buying power to add. We're a little bit more trades, a few more trades on than I really want to add. So for adding, so I'm not going to do anything here. Sticking to the strategy builder. I'm a little bit over what I want to do. All right, ES, we've got a naked put here at 76%. So hopefully that thing comes off in about a week. I got another naked put here at 32% winner. Those are the only two naked puts. The rest of these things are all put debit spreads all over the place. Put debit spreads everywhere, plus the 120-day naked put. Okay, and then more put debit spreads everywhere. So I feel we're in pretty good shape. There's a lot of put debit spreads on for just two naked put trades. I only have 4 total naked puts going, and right now I have 11 put debit spreads. So 1, 2, 3, 4. Oh, no, sorry. Let me. two, four, six, eight, like nine. I think nine put debit spreads covering just two naked puts on the 112s plus the 120-day naked put. I'm I'm pretty happy, which is why I've let most of the hedges go bye-byes. Uh, because I've sized it so correctly, in my opinion, and small that we'll just keep taking the profit on there. The 112C trade's now up for the year over $14,000 in gains this year so far. So pretty good shape. Nothing to do there. Gold, got a Jade Lizard working. Okay, that thing's up 36%. I got a 112 working. That's only been on for 7 days. It's down a little bit here by $30. Not worried about it. Nowhere near the trap, nowhere near profit. And then there's a Strangle here, which is in good shape. This Strangle is up 43% in 14 days. I probably could just take this thing off. I usually shoot for 50%, and it usually takes 30 days. I'm at 44% in half that time. So I'm actually going to do that. So let's see. If we get filled, we get filled. There's no reason hanging on for 6% more and waiting weeks for that potentially. If we've already got the majority of the money, let's take the money and run. We may or may not get filled on it today. So there's gold, Apple. There's our poor man's covered call trade on this one. The underlying's flat. We're up nicely here. Nothing to do on that. IBIT. We're fine on the underlying. We've made a nice $570. We're at 81% in 5 days. I don't see any reason to take this thing off. We could, you could take it off early and maybe reshoot, but I'm not going to do anything. MicroStrategy, we're up nicely on the underlying, and then we are also up on this covered call. Nowhere near taking that off, so let's get out of there. QQQs, same thing, nothing to do here. Underlying's up great. Covered calls winning, 70%, nothing to do. This is a 0 DTE trade that we put on today. It hit 50% earlier, and I didn't take it off. I got busy. It's dropped back down a bit in here. I mean, if I win, I win. That's my fault. I didn't take it off, but I'm just going to let it cook in here. I did post this one into Discord, by the way, and it did hit 50% winner this morning. I just didn't take it off. All right, SPY. We've got our leaps that are in great shape, and then we've made almost 76% on the covered call, which is fine. Nothing to do there. And then TLT, we've had this strangle on now for 2 weeks. It's at 30%. I'm not going to do anything with that. Got a naked put on Tesla. It's down $100. Nothing to do there. And UNH are normal trades. So there's no adjustments to be made here. If there's a trade you want me to model out, I can, but I'm not looking to add. And if I look at my strategy builder, my goal is to use about $70,000 total on that trade. Right now, I'm well under that. I'm only about 27,000 because I've only got 2 naked puts on. If I add a third, I'll probably be closer to that. But really, I'm doing a 112 on there. I'm making almost $1,500 every 2 weeks. I make $3,000 a month on that trade. It's better than what I planned for on the dashboard, so I'm good. I could actually probably ratchet my BP allocation down on this thing because I don't think I'm going to hit my goal. I'm usually $15,000 per trade. That would be 45. And I'm shooting for more, so I either could size it up or I could put the money into something else. And right now, Okay. I'm not in that. So uh, I may just reallocate it to the spec trades. All right. So, and then you have the SPY income poor man covered call. I allocate 40% to the account. Yeah, Dan, I'll get that one. So you allocate 40% to the account. Uh, and that means I can allocate about $70,000 worth of cost for the income poor man covered call. And I'm adjusting my, I'll share this in a minute with you guys so you can see. But I'm currently using about $31,000 between QQQ and the SPY trades from a margin standpoint. So my capital required on those is uh, fairly small. And it's definitely under my 69,000 allocation. So really, I need to probably ramp up what I'm doing on SPY and QQQ. I just haven't found a good entry, but while I'm not entering, it keeps going up. So I really need to add more to that trade. Uh, I'm not doing it justice right now. I think. All right, I'm going to get into something else with you guys in just a minute, but I'm not concerned on the July 9th tariff deadline now. I talked about that kind of recently at the beginning. I think the markets are kind of immune to that. Trump's already extended everything to pretty much August 1st. I think nobody cares anymore um, about it. So, can we see a little selling tomorrow? Sure, but I think we could be seeing some selling today. I think the market's just in a position overbought. I don't see any reason for the markets to have a big sell-off and head lower. All right. What was I doing? Okay. Let's go back and take a quick run through the strategy builder. If you guys aren't, using this thing properly, this is the best tool that you have out there. Find the strategies that you like, play with your BP allocations that you like on these. Okay, so you can play with these and see which way it works. Right, and right now the 112 trades. I'm under the allocation. I'm going to move this down from 40 to 30 here because I just can't seem to hit the 60,000 that I was at on that trade. And I still don't mind having a third of my account in there. I don't know that I can increase the size a lot, but maybe we'll see. The poor man covered call, I was not even hitting that. Yep, Nick, we'll hit that too today. I'm underneath allocation on these. When I look at poor man covered call allocation, like I said, I'm at 32,000 versus 51, and I just took it down to 30%. So I'm not even adding all up in here. All right, future strangles. Okay. Right now, I'm at like 9,000, but I do allocate up to 17,000 for it. I'm not going to change that allocation. That's been good. I'd like to get another strangle on. Stay tuned and hang in there with me. Spec trades 20%, which is about 34,000. I'm significantly over that right now. I am massively over that, about $69,000 over because of a bunch of naked puts on UNH and naked put on Tesla, a Jade Lizard, and some gold 112s and oil 112s. So because of those trades, I am over, but I'm still fine with my overall buying power. What I want to add in here, yeah, is another is just the poor man's covered call, and then we'll get to what you guys are your questions. We have a few minutes left on those. So the poor man's covered call. All right, we got about 60% in these first few, and let's look at. Hang in there with me. Hang tight. Okay. I'm just trying to fix my formula here. All right. Now, yes, I'm over 100% here. I totally get that. In fact, this is probably closer to 25 right now. This we can go 15. I think this puts us right where we need to be. I want to adjust these to be a little bit more accurate with me right now. So I think this adds up to 70. Okay, this is right. It's 100%. So it's kind of a different allocate or just renewing the allocations from this, right? And we'll take a look. And I do have so 51 grand allocated to the 112 trades, and right now I'm only using about 30 grand because I'm only at two versus the normal three. So we'll get there. All right. Next thing here is the poor man's covered call. The income poor man covered call on just SPY and the Qs. 43 grand I've allocated. Okay, as you can see here, I am significantly under that. So I really can be adding some more QQQ and SPY, which I will do on any dip. All right. And then the poor man's covered call here. I'm going to allocate about 25 grand. I think I'm over that, but 25 grand for just the standard poor man IMPCs. And I'm currently at about 53. I'm over that because MicroStrategy is a pretty expensive one. So I'm actually over that right now running these extra um, income poor man covered calls. So my allocation on this, I just want you guys understanding that. My allocation is only 25 and I am over that right now. So do I close some things out? I'm over on spec trades, which is at 30 something. Right now, and I'm over on income. I have a little bit more trades on than I should, but my buying power is not in a terrible position, and that's really what matters to me. My buying power is a little higher than normal, so I really would like to get some trades to come off, but I'm sticking to my allocations here. All right, let's get back in and trade. But if you're not using this tool, okay, I think it's the best tool out there. The strategy builder. Find out exactly how you want to trade and make sure you're sticking to it. And essentially, what it's showing me is I've over allocated too many spec trades and one too many here, even though I'm a little lighter on a few other trades than normal, that I probably need to let some things come off before I put new trades on right now. So I've got to stick to my plan and do it. How do I record? I'm looking at your guys' question. So SPY PMCC row, how you record the profit target. This one here, is this what, I don't know if you're looking at this. The spreadsheet is in Tom's resources. Yes. Go to the FAQs and you can see the template spreadsheet if you want to use that for your own there. So it's in the FAQ section. You'll see the spreadsheet there that you can use. The average profit, how did I come? You're asking, I guess, how did I come up with that number? Uh, I really came up with that number based upon the at the money strike. So if I was doing that today on SPY for one contract on, on SPY, or at least for me with about $50,000, I'm making over 2,000 on it. So it's pretty close to what the at the money pays per buying power, right? If you would go in and put this trade on right now, hang tight. I know there's a lot of questions popping around. Okay, if I would do this trade on SPY right now, let's say we go out a year roughly. We'll just pick this one here, even though it's a little bit more than a year. And if we bought the strike, the buying power here, and let's get to $10,000 in buying power. Okay. The buying power for me on a portfolio margin account. Okay, oops, why did it go to 20? Okay, it's very funky. All right, let's just keep it to as close to 10 as possible. Right, so if I bought the leap for about $10,000, which is what this is, I would have two contracts at $10,000. And if I sold the 7 day at the money, I was getting around $5. Right now it's a little bit light. Um, all right, I'm going to make essentially 800 bucks on it. I was making close to 500, uh, which would be about 1,000. So I might be a little over. Maybe it's more like $1,000 average profit as opposed to 1,200. So I readjust those periodically, but that's how I came up with that number uh, is I just put a trade on, what is a $10,000 trade? What's the average profit? I was getting about $5 for an at the money on that. So I think that comes out to 1,000 bucks. So it's a little bit over. Uh, but I think we're in good shape on these. All right, let's get back to a couple questions here. What naked put would I do on Meta? So let's just knock these questions out with you guys uh, here. So if I'm looking at Meta, okay, I'm probably going out now. You got earnings in here to factor in, so I really wouldn't want to hold over earnings, but I'll do like the 24-day right now. It's 1 day past earnings. I'm sure we could be out before then. If you read the trade plan, and again, this is the important part of everything that we do, you got to go based upon my trade plan. And then I won't deviate from my trade plan either. What does my trade plan say? So if you're in the Discord or you have the trade plan downloaded, either one, it tells you exactly what to do. But if I'm looking at a spec trade, which is a naked put, okay, and you did say naked put, right? Yeah. So naked put trade, hang tight as I find it, that naked put trade. Got credit spread. Where's the naked put? There it is. So for me, naked puts, high quality stocks, you know, trending, MACD, all that stuff on Meta looks pretty good. Okay. On the daily, everything kind of checks out. Bouncing off support, which it is off of the trend line here. I typically go um, on these. Geez, hang tight, hang tight, hang tight. I'm going to um, the resources here, pulling this thing up on it when you look at spec trades. So if you go to spec trade strategies under Tom's resources, you can see the naked put trades outlined in there. 30 to 60 days. So I'm doing this one at 24. It's close to 30. I have earnings, so I don't want to get beyond that. Delta, I'm looking, if you're below the 21 EMA, which we're not, um, I'd go a little bit lower. If we're above the 21 or at the 21 EMA, okay, I'm right around the 10 to 15 delta, which would probably be about right. So I'd probably sell the 645. And if I look at the chart, the 645 puts me, in fact, that's probably a little low. The 660 on that is right at the 20 delta, well, which fits my I'm 15 to 20 delta, but close. Just anywhere in here. This 660 is not only just is right at the expected move, it's also at the 3 ATR band on here. So I'd probably be looking to sell on Meta. This is what I would be selling. Okay. In fact, so I'll pop this thing for you and I will put it in Tom's Trade Ideas from Zoom. This is a Meta naked put. Okay. So that's the one. That's what I would be doing on Meta if I was selling naked put. Just per my trade plan, pretty much fits right in on that. All right. Any future spec trades around $2,000 buying power? So you can figure out any, what were the futures trades? I thought the oil 112s or strangles, gold 112s or strangles were the best plays right now. If I was going to do an oil 112, let's see, at 71 DTE, let's put it on here. We'll go down to about 7 delta. Okay. All right. This 112 here, it's a good setup, but it's going to cost you more than you have. You want a $2,000 trade. Um, okay. So this is a good 112 in my opinion, but it's going to cost you about 5,600. Right. So that's just too much. So another trade you could look at would be a Jade Lizard in this. So how do we convert this thing to a Jade Lizard? Okay. We go up around the expected move. Again, review the trade plan. Okay. And the Discord trade plan will tell you exactly what uh, the spec trade strategy should look like for a Jade Lizard. Right. But I'm going to go about 60 days, about the same thing, selling the same Delta naked short put, but I'm going to sell a call spread here, probably at the expected move. And we'll do a narrow call spread. If we take a look at this thing, doesn't really work out great. Might have to, okay. There's a Jade Lizard for the most part. Your buying power still, oops, I'm sorry. That's it. Okay. Your buying power in this one's right around 3,200 for a Jade Lizard. If we stay in this range on oil, I think that's fine. You have no risk to the upside. You're struggling here to look at these things on futures. And then gold, I think you're probably not going to get a good setup on gold for like a 112 or something like that. So a $2,000 trade, pretty difficult to do even with futures in here. Even if I did like a 112 on these, you're going to use $14,000 on gold. Come on, come on, come on. Oh, where'd you go? All right. Well, you're at $14,000 on gold. You could try to do like a 111, something like that. I think would maybe make some sense to you. But that's pretty much it. I just don't think you have an opportunity to get in. In the money versus out of the money covered calls. Right. So if I was trading SPY right now and I wanted to roll, okay, what am I looking at on SPY? So I'm looking at something that's in a bullish mode, pulling back, but it's still pretty bullish. If you look at the trade plan on this, and let's look at the core trade strategies on the income poor man's covered call. Right? I'm selling the calls around 7 days, okay? And really I'm looking to go at the money. So at the money for me is right around the 621. If we're pretty bullish, maybe I'll go no more than 40 delta. I might go like 1 or 2 strikes higher or 1 or 2 strikes lower. Either one of those. I think, but I'm really, looking for my $5 if I can get it. I'd like to, if we're in a pretty good bullish trend, I might give myself 1 or 2 strikes, but I won't exceed like 40 delta here. Ideally, the 620 is a pretty nice looking opportunity in here. If I was doing something right now, I'd probably go in the money. You're still getting $4 of extrinsic, which is almost the same as the in the money. Okay, here, and I'm giving myself in an overbought situation a little bit of downside protection. If we start to head lower, we break like a 21-day moving average or something, I will start to go lower on these as well. A little bullish, 1 or 2 strikes. Okay, this is pretty close to at the money, not like out of the money stuff that you would see on a standard poor man's covered call. You're right at the money, give or take a strike or 2. All right, so hopefully that makes sense, but I think you've got to just use a little judgment. in there. Just trying to think. Yeah, you could use GLD or USO if you want to make those trades. They're a lower priced um, option. The question was futures, so yeah, I just think you can't find futures at that cheap. All right, so there's my strikes. I'm at the money, but I'll go up or down, just one or two strikes usually, depending on what the market's doing right now. Okay. But I really want to get as much as I can, so trying to stay as close to at the money as possible. All right. If there's anything else, yeah, MES if you wanted to do naked put campaign, but if you remember, I said I would not be trading ES or MES right now. So those are off of the books because of where they are. They just don't set up well um, for me right now. Doesn't mean you can't do it. Okay. Um, and I don't like corn and wheat and all of those things either. A little too volatile for me. Trying to stick away from those. I mean, you could put on. We did talk about copper and silver as strangle opportunities. Those would set up for you. So if you did copper, you could do a copper strangle, something along the lines of the 445 to probably the 675. No, not that not won't even set up either. I thought copper might set up. That won't even set up for you either. Still need about 6 grand in buying power. Thought copper might set it up. Maybe the Aussie dollar will set up for you as well. That is a very small contract, but it's not a bad strangle setup, so maybe a 6A strangle. Mm, something like that. Okay, so we could set up this Aussie dollar strangle in here, and you can actually do 2 contracts of it, making 380 bucks on your $1,700 there. Not a bad trade, and like a 10% trade in about 30 days. So this is not a bad trade. If you can get in on it, this would be probably the best thing to do right now would be the Aussie dollar strangle. All right, I think we got everything knocked out that we need to. We're a tad over time, so let me wrap it up. There you go. I'm just a little cautious that the market's here. I'm sticking out. I need to let some things come off, but we've had a really great month. We have a lot of things that cooking, looking pretty well. Our SPX 0 DTE is now up 60 some percent on the day. Probably should take that off. There we go. 60 some percent winner, 65% winner on 0 DTE today. If you had followed me earlier, you could have probably gotten out at your 50%. I just wasn't paying attention. So nice winner. We'll take it. I like winning, and that should keep us in good shape. All right. Hope this was helpful for you guys. Enjoy a great rest of your day. If you have any questions, pop them in Discord, and we'll see you guys then. All righty.